Take a look at what was a big disconnect between bond markets and actually what the Federal Reserve is saying. Where are we with that?
Yeah, I agree. It's this discrepancy, especially between bond and rate markets in terms of they're somewhat aligned with higher rates, and then what the credit and equity markets are telling us in terms of there's this wall of money which is supporting the equities market despite all this quantitative tightening we're seeing. So it almost feels that a few months ago, or with that latest jobs data that we did see, that markets got a little bit complacent. So perhaps certain central banks are behind the cycle and behind the curve, and the market needs to better price that in.
Okay, so more volatility to come, you think,
it
across
feels
risk assets?
that way, especially in global markets. China's at a different end of the spectrum.
Yeah. People kept saying it's going to be different from last year, though. How much different could it be? Just given what we've been seeing so far.
I think you're probably going to see this build-up, so to speak, of potential problems unraveling, and then the interesting dynamic will be that if you have all these major economies going into a recession or a soft landing, what happens when you have the second largest economy in the world basically coming out of a recession and growing quite strongly if the data continues to print in the right way? And
with the geopolitical tensions and the rivalry right now, is China the same position as it was, let's say, after 2008 to be able to lift the global economy out of its torpor?
I don't think they want to.
Well, that's my point.
I think that the health of the domestic Chinese economy is really, really critical. And don't forget, we still have some of that outstanding debt from the 2008 stimulus, and that's why over the past 2 years, you haven't seen huge amounts of both monetary or fiscal stimulus being injected into China. It's been very much on a tweak-by-tweak basis, even though the messaging is still quite on the easing side.
Do you think, given that this kind of post-COVID economy is already booming, does this economy need more stimulus? Do markets still need more policy signals for this rally to resume itself?
You know, I always think of China as, in particular, a car with an accelerator and a brake and just getting that happy medium. So, again, we've had this beta rally since the reopening announcement. The next leg up is probably going to be an alpha-driven rally. So it's all about stock selection. But in terms of policy, easing monetary policy in China, even for the property sector, isn't going to fix the issues there. It's about the property developers themselves and the trust that developments will actually occur.
It's structural as well, is it not?
It's structural. And also, if you ease your rates as major economies tighten, then the interest rate differential is just going to widen, currency impact. So I think, in theory, what the regulators and policymakers in China are doing is actually going to lead to this sustainable economic recovery.
And so, I think you're saying that the rally's been very sustained by beta, but you're looking at alpha for the next leg.
How do you play it then?
Exactly. What is that exactly?
So it's the companies that can deliver. So the best leaders in different segments or industries, those that have got balance sheets that, should they need to ramp up their operations to, for a normalized environment, they can. Those companies that pay attractive dividend yields, reward minority shareholders. And this latest development this week in terms of SOEs or state-owned enterprises actually almost be giving KPIs. I think that's really fascinating.
How so? Does that mean that they look more attractive for a foreign investor that's looking into these state-owned enterprises right now? I mean, what sort of implications would that have?
Well, historically, it was all about China and the consumer and the growth names. And for many, many years, being a bit of a value contrarian side of it in terms of investing, we were looking at the names that people didn't like because of the sector they happened to be in or because they were state-owned enterprises. And in fact, that's where some of the development improvements occurred. And now that they have targets in terms of ROE, dividend payouts, you're going to see better managed governance and companies in China, and that feeds into the story of not just the rise of the Chinese consumer, but the Chinese investor too.